Welcome to Morningstar. I'm Holly Black. With me is Ned Naylor-Leyland. He's manager of the Merian Gold and Silver Fund. Hello.
Good afternoon, Holly.
So I'm guessing it kind of does what it says on the tin, but I'll ask anyway. What does the fund do?
So the Merian Gold and Silver Fund is not really an index fund. It's more of a combination of physical metal, gold and silver, and mining equities. So we seek to combine four sort of subcategories in one product to optimize an investor's outcome over a sort of 2 to 5 year time frame.
So the way a lot of investors, I think about gold in their portfolio is it's kind of an insurance policy. So it can go along not doing an awful lot for a long period of time, but when everything goes wrong, it kicks into action. And arguably everything has just gone wrong. So what's the kind of mix in your portfolio at the moment? How are you handling this environment?
Yeah, we have a bullish setup in the portfolio. We actually have two different models. One, we can be defensive, but at the moment we are bullish because our signal, unsurprisingly, is telling us that substantially higher prices are ahead. As a result, we're between 15-20% in physical, and then more or less equally split, so 40% odd each in gold and silver mining equities, which are operating in the Americas and Australia. So we don't invest in Africa or Russia or Central Asia. We find those jurisdictions carry additional operating risk we're not comfortable with. But you are right, at the moment people are definitely a lot more interested. I think that one of the keys here is the divergence between central bank gold positioning and the street. I think at the margin, investors are waking up to the fact that this is something that central banks hold in very large quantities as, in fact, the zero risk instrument of the system. And for decades and decades, the financial markets ignore that. And I think they're just starting to wake up again and remember this fundamental and very important fundamental truth.
And I think a lot of investors will have got very excited in recent months because the gold price has soared. But even in that environment, does that mean the gold miners can get past the turmoil that's affecting so many other sectors?
Yeah, I mean the gold price has soared in everything other than dollars. So in dollars, we still reached the high that we were at 8-9 years ago. So you are right though in sterling and euros and this, that, and the other. We are at fresh all-time highs, and the mining companies are finding the coronavirus environment to be very patchy depending on where they are. So companies in Mexico, for example, are currently under a temporary shutdown. Australia, no restrictions. All over the world, there are different outcomes. These outcomes generally get priced into the stocks pretty quickly, would be one thing I would certainly posit. But overall, it's been patchy and it's been tricky, and I think it will continue. But the key here is that their operating environment beyond that is exceptionally bullish due to very, very low energy prices, weak commodity currencies. So you pay workers generally in the FX line in which you're mining. So Aussie gold miners pay their workers in Aussie dollars, and they sell physical in dollars. So you have an FX tailwind there, and also other components of mining, so equipment, people, etc., all deflating. So it's a very, very positive environment over and above the obvious one to do with shutdowns, which you brought up, which of course is a bit patchy.
So with all that in mind, what's the rest of the year look like for someone holding gold? Has the price got further to go?
Well, I'm not going to nail myself to a mast on that one. What I'll say to you generally is that when investors are worried about the purchasing power of sterling and dollars in the future, which is where we are now and the reason that gold is going up, generally bull market cycles see good, strong double-digit annual performance for gold. And generally, silver will do a multiple of that. Now, silver has lagged this move, as it often does initially, because capital seeks out gold and the largest gold miners initially, and then it tends to percolate down and you'll see an outperformance from silver. So I'm not willing to give you a price target, but I am willing to say that I would expect silver to play quite material catch-up through the rest of the course of this year, and would be a bit of a nod to that, I suppose.
Ned, thank you so much for your time. For Morningstar, I'm Holly Black.